Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. I want you to listen to my new intro and see if you like it. Okay, thank you for listening, everybody. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, and wherever fine podcasts are heard. Subscribe for free and never miss an episode. I just want you to know that we are on all of these great outlets in order to have you be able to get this show at your convenience from a number of different sources. Please leave a review. Why? Because we want to know what you're thinking about what we're doing each and every week. I try to be topical, I try to be current, but at the same time, without your feedback, I really don't know what's going on. So if you could do that, that'd be great. We're also on YouTube at Jeff Barton, the Mortgage Voice. This show, every show we've done for how many years we've been doing this, Daryl?
Going on 4.
Okay, 4 years worth of shows on that particular channel. There's a lot of generic, great information as well as interviews that you can see. Also, subscribe to our channel and click on the bell to get notified whenever a new episode is available. Check us out on our website at www.themortgagevoice.com. Thank you very much. Okay. I don't know if that was good. What do you think? You think that was...
That was grand.
Perfect.
Anybody that doesn't do anything after hearing that should be ashamed of themselves.
Anyway, thank you again for listening to the show and coming to us. KCAA, KMET, and K-Tahoe, a couple different new outlets we're trying to get in Las Vegas and maybe down, maybe if we can finally do that thing. But it's just, I wanted to talk a little bit today about our expectations in the coming year as to what's going on in the mortgage industry here in Southern California. Why? Because it affects a lot of what you're thinking about when you go get a mortgage. Everybody in Southern California, unless you're going to a bank for a mortgage, uses a mortgage broker or a mortgage banker. 30% of the mortgage originations in Southern California come from that group. Now, how many is that? Probably over 1 million a year. That's a big number. We probably originate, 5.5 million nationally, and in Southern California, we originate probably 20 to 25% of that. Why? Because it's a big market. There's a lot of people. There's, 39 million people here in California. And in Southern California, there's a high density of people, both in San Bernardino, Riverside counties, certainly, Orange County, San Diego County, Los Angeles County, and a number of counties in and around that, Ventura County as well. What does that mean? It means that people who make decisions about what's happening here do so based on availability of funds. And what I mean by that is, can you get a loan and at what cost can you get it? So there are a number of different happenings this year as of January 1st. A couple of them are in the tax area. Now, why is this significant? Your loan officer, your loan broker, if you're going to a mortgage banker or a mortgage broker, have been traditionally paid a certain way. That has all changed. As in many industries in Southern California, in California in general, being classified atypical, a type of worker as a 1099. Everybody knows what that is, right? As a business owner, if you have a corporation and you are sent a 1099, it means that you have a business that's independent of the people who are paying you, so therefore they're not taking out taxes. That's all changed for many industries. The entertainment industry, absolutely changed. And certainly in the mortgage broker business and in the mortgage banker business, those loan officers who you are talking to about the loan are now being taxed as you would if you worked at McDonald's. The same way, the same type of taxes getting taken out. And by the way, there are 2 new taxes on your California W-2, W-4 forms. Check it out. And check it out if you're getting paid bi-weekly, every 2 weeks.
I believe so, yeah.
Yeah, that's what it is. So if you're getting paid every 2 weeks, what you're going to see on that is that there's a couple of new fees on there or taxes. And some of them are, implemented without much fanfare. Why? Because what goes on in Sacramento stays in Sacramento, I guess. It's one of those, I have no idea what they're doing up there. But your loan officer is getting paid via W-2 now, meaning they fill out a W-4, they get paid W-2. Now, why does that impact you? The reason being is that loan company that is giving you the loan, or the mortgage broker that is giving you the loan company, the mortgage banker, they too are paying in. And so there are roughly 8% new taxes being paid by the employer of that loan officer and 8% new taxes being paid by the loan officer themselves. Why is this significant? There's only one person who's really going to end up paying in any of these scenarios, and that's unfortunately, and it has been even described by the EDD department here in California. EDD is the Employment Development Department, Division, whatever it's called. They are the IRS of the state of California, right? And they are very serious people about getting money, your money, from you. Now, legitimately or not, and they are empowered by the legislature to do this, they, like I was saying, they've got these 2 new taxes this year, which I've never heard of, but if you look on your paycheck, you'll see them. So they are aggressively coming after and going to go after anybody who issued a 1099 in the past, who this year should be issuing W-2. So therefore, all of these people in the mortgage business who don't work for Chase and Bank of America and Wells Fargo, who are W-2 companies nationally anyway, are going to be taxing. And that particular increase in the taxes that the state gets is going to be paid for by, yes, you, the consumer. Now, why do I say that? I'm not the only one saying that. EDD said it. The state of California is saying it. The reason being is that the margins are so thin in what that business is. If you're running a mortgage broker company and you're a mortgage loan officer, your particular way that you make money is through fixed fees built into a transaction. If you're a mortgage banker, you have certain elements that you have to adhere to. It's the 3% rule, like nothing can go over 3%. And so what that means is that during the time that the loan officer is pricing out the deal, they now have to look at taxes they're going to be paying that they didn't have to pay before, right? So it means that the rate that you get is probably going to be a little higher, especially if you're non-QM. If you're non-QM and you're a mortgage broker, you're going to go for a higher rate and you're going to up the split that you're going to get. Most brokers, most bankers run it at 3% or less split. So if in fact they get that 3% from the loan that you're getting, the fees that you charge, the exempt fees are going to go up, and the rate is also going to go up. Non-QM is a little bit different. Mortgage banking is a little bit different. But the cost of the taxes is getting passed on to the consumer. And I'm not the one telling you this, but if you're out there shopping for a loan right now, and we're going to get into some of the rates that have gone on in the last couple of weeks, what's happening in the stock market, a little bit about the economy in the next segment. But the main aspect here is that the cost of doing business in the mortgage broker, mortgage banker, and even in the banking business has gone up. Even though the margins are still razor thin in most of these businesses, the cost to the consumer is going to rise. Now, is that a fair thing or is that, I don't know. I'm not in the policy business. What we are trying to do, is to make sure that compliance with state law is at a premium, and as a result of doing that, cost of business does go up. Now, in the business that I'm in, the absorption of increased costs always gets borne by the business owner, always. In this particular case, the taxes that need to be paid, W-4 you fill out, W-2 you get at the end of the year, means that there were certain tolerances, certain credits that you could expect from your broker. You're not going to be able to expect it anymore. And I'm telling you, the reason why is because the cost of the business is up and the margins are even thinner than they used to be. So what does this mean? Does this mean that we're trying to drive out the mortgage broker, the mortgage banker? No, it means that EDD sees a big pot of money and they want to get it. And they say by law, either through the CFPB or through the new AB5 is what, and if you're looking for an explanation of all of this, because as you know, if you're looking for a loan and house prices are increasing, it's probably going to be that your loan costs are going to be increasing. Maybe not the rate, but the cost of the loan are going to be increasing. Go to AB5. That's Assembly Bill number 5. Look for the explanation as the difference between a W-2 and a 1099 employee. Now, the benefits to those people who are getting those taxes taken out, they're like anybody else. Unemployment, Social Security. I guess there's all kinds of federal and state unemployment insurance and a couple of these other new taxes. Anyway, I'm Jeff Barton. I'm glad you've tuned in. Sorry for that news, but I wanted to be the first to get it to you so that you're not sticker shocked when you get some increased fees on your loan estimates. I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play and whatever fine podcasts are heard. Subscribe free and never miss an episode. Hey, leave us a review, too, because I really want to hear what you have to say about what we're doing on the show. And if you want to see us, the video portion of the show, you can either tune into the radio stations while the show is being aired on the weekends and on Thursday, or go to YouTube. Our YouTube channel is Jeff Barton, the Mortgage Voice. Subscribe to the channel and click the bell, and then you'll be notified each and every time that we have a new program. Thanks very much for listening, and I'm Jeff Barton. Anyway, thanks, Lewis. With us today is a terrific guest who's been with us many times. Well, 2 or 3 anyway. Louis Venega of Venega Capital and Acquisition. Louis, how are you today?
I'm doing good. Thank you for taking the time, Jeff. Thanks for having me in the show today.
Thank you very much. You know, on an earlier segment of the show, we talked a little bit about what's going on in the market in Southern California. Give us your expectations as to what's going to be happening this year as we roll out 2020.
Well, as you know, right now the rates on the market are super low, so this is a great time for anybody who wants to buy a property. If you're in that space, there's a lot of properties out there in different areas. The market has been pretty hot last year, and there's a lot of sales activity in real estate in different industry and different areas, but. You know, as the holidays arrived, everything is slowed down a little bit. But now things are coming. They're starting to pick up. And if you were in the market to buy, the rates are super low, and with the low payments, so you should definitely take advantage.
Do you think when we're talking about inventory, real estate inventory, have you seen? That the real estate inventory is still low, or is it increasing yet? Because I know the spring buying season is still a few months away. So where are we with the inventory in your area?
The inventory is still low right now.
Right.
As you can tell, sellers right now are waiting they put a pause during the winter, during the holidays, because they don't want to be interrupted by the open houses.
Right.
Or whatever.
That's true.
So
I forgot that.
Yeah. So
right.
As soon as the new year comes in, and I would say for around February, March, that's when the whole activity begins to begin to get busy again.
What do you see most people who are looking to refinance, or are they mostly purchasers in your particular business?
I think there's a lot of people that are taking advantage of refinance right now as the rates are super low.
Yeah.
But also, everybody's curious as far as what's out there when buying property. So it's a little bit of mixed. Some people are waiting. They're waiting. They're thinking that there could be a recession coming up. And,
yep.
They're kind of skeptical, and they're thinking, okay, should I wait or not should I wait? I say, do not wait. Rates are so low, and even if there's a recession, the properties could go down very little, not a lot. Not just something that happened in 2008,
right?
But a little minor, I would say. So you should take advantage.
Now, when in part of your business, which talks about acquisition, I assume that means you're an investment property that someone might be looking for either a rental property or maybe a commercial property. Do you think that at this point, and I guess you just answered it, but I want to ask it anyway, do you think people should hold on to their money and wait for the prices to go down with a recession? Or do you think, obviously, because the rates are so low, it's better to get in now?
I think you should take advantage now. Real estate has always been a great asset for investors. The real estate market is always a better market than the stock market. If you put your money in the stock market, in one day it's really high, and one day it's super low. Real estate has always been consistent. As long as you get a property that it gives you cash flows, consistent, I think you should definitely invest in real estate.
What is the investment that you would advise people to get into? Residential, commercial, units in a building? What are you recommending to your clients?
I think you should. I think properties right now, they're a little bit elevated in the commercial space.
Yeah.
So I would definitely recommend you to buy properties in residential units. But at the same time, there could be opportunities out there for commercial properties as well, and there's always opportunities out there. Just because some areas are elevated doesn't mean that there's some good opportunities out there for you to buy. So keep your eyes open. I would say just and be open to residential or commercial.
I understand, and we talked a little bit off air about your family and your growing family. For young people who are trying to get into either the real estate market or trying to figure out what they're going to do in terms of their long-term investment for both retirement and obviously paying for education for the kids, you mentioned obviously the investment side of it. In terms of, I guess, out-of-state or other types of real estate, do you have thoughts on that as well? I mean, obviously here in Southern California, the prices are really high, and that affects a lot of people's decisions. So do you think...
Yeah, you're right. I'm sorry to interrupt. Yeah, but in comparison to other properties out there, if you're in the market to buy other properties, you can buy properties in other areas, Chicago, Texas,
right.
Nevada, Arizona. So you don't have to necessarily buy properties here in Southern California. Although Southern California, you gain appreciation, and they're more stable, and because there's a lot more people.
No, that's true.
It's going to cost you more. Yeah, it's going to cost you more, but if you have limited a budget, and if you think just buying and you have some savings, maybe you should consider other properties outside the state.
Yeah, you mentioned also that I'm sorry. You mentioned also that the stock market itself is not quite necessarily the best investment, and we're seeing numbers in the stock market that are blowing my mind. When I was a kid, the stock market was 800. It's currently about 29,000 plus. But I still agree with you that real estate is the soundest and safest investment, even in a volatile market.
Right. I mean, right now we don't know what's going to happen with the whole situation in the Middle East. So
right.
Everybody one day says, okay, the market's going to be great, and then the next day, we don't know what's going to happen. So I always advise my clients invest in real estate, have some sort of a foundation for the long term. Like you mentioned about children.
Yep.
Build a foundation for your children, and eventually those properties can pay out their education or even the property you live in, for retirement as well. So that's my advice.
No, I like that advice. I think in Southern California, because we have volatility in prices, but we have great high ends when prices are good. I mean, we're now way above where we were pre-crash prices for both real estate, and the loan costs are so low, it just makes more sense to get into something which is a solid asset versus what might or might not happen in the stock market.
Correct. I think, like I just mentioned to you, I think real estate is a great investment for you and your family. Again, either here or outside the state, but you should definitely begin building some sort of a foundation in real estate, and then diversify. You want to diversify your portfolio. Yeah, I'm not telling you not to invest on the stock market. You could do that. You can buy companies. You can invest on the stock market. But I would advise everybody to start working on building a foundation on real estate, and that's something that is safe, and it could bring some good returns if you're an investor who wants to hold properties for a longer period of time. If you're thinking of flipping a property, yeah, there's opportunities out there. You just have to look.
Could you give people your phone number so they can get in touch with a terrific agent if they need somebody in the loan or in the real estate area?
Sure. My phone number where I can be reached is 310-988-1801. Again, 310-988-1801.
Louis, thanks very much for coming on. This is Louis Venega from Venega Capital Real Estate and Acquisitions. Thanks a lot. I appreciate it once again.
Thank you. Thank you for having me, Jeff. Have a good day. And if you, or anybody knows who is interested in buying or selling a property, give us a call.
Great. Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. Be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your host in The Mortgage Voice. Check out the Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. Subscribe for free, too. By the way, you can sign up and you can get alerts as to when the next show is, a little bell on the website. If you go to our YouTube channel and do that, it's Jeff Barton at The Mortgage Voice, and that's our YouTube channel. It's great. Sign up. You can get a lot of information, a lot of great information. People that come on the show each and every week, we have them available. We try to make sure that information is also through the show. We send out a lot of alerts. Anyway, it's good stuff. One of the guys that does that for us all the time is Bill Orr, who's a loan officer over at Malibu Funding. Bill, how are you?
I'm great, Jeff. How you doing today?
You know, I'm good. Two things that I wanted to start off first is, one, Happy New Year to you. I appreciate you also.
You too.
Yeah, thanks very much. I appreciate you working and the hard work that you do for your borrowers. I wanted to quickly hit upon one thing, problematic borrowers and the ability to adapt to the changing climate. Give us your thoughts.
Well, we're actually, funny that you mentioned that, because I've actually got a couple of those right now. I've talked to a lot of people who will get turned down because of their credit from the bigger banks.
Right.
You know, Bank of America, Chase, Citibank, Wells, not to pick on them, but, you know, they have minimum FICO requirements. And so I've seen too many times where people get turned away and they think that's it. They think that's the final word. In reality, it's not.
Mm-hmm.
I was able to get two clients approved. One I'm working on this minute, actually, on an FHA refinance, and their credit score is 518.
Oy.
518.
Yeah.
And we got them an FHA loan. And so those opportunities are out there.
Yep.
For people who have credit challenges.
Let me ask you a question too. There is a patch that we call the what is it? The QM patch, right? That allows the DTI to go above a certain percentage, which is about ready to end at the end of this year, which will then eliminate a lot of borrowers that can qualify today that might not be able to qualify tomorrow. That's the debt to income level. It's supposed to be 36 and 43, and currently it's up to 50%, and that's going to go away. So when you see these kind of problems, because the government entities or whatever, do you see non-QM being the solution? What do you see might be a solution for these type of borrowers? Maybe not now, but soon enough.
Well, that's, you know, you hit the nail on the head. So, you know, the non-QM options are, they do allow for the higher debt ratios, and then FHA has allowed 56% back in debt ratio for a long time.
Right.
That's another option as well. So it's kind of a middle ground, and yeah, we always have non-QM. And for certain scenarios, I've got a couple transactions right now where the borrowers are having a difficult time documenting their income, whether they take money under the table,
right,
whether they don't claim it, whatever the case may be. They may be self-employed and they make good money, but they also have a really good CPA who writes down all their taxes, and we see that a lot. self-employed people, commissioned people, salespeople, all the type of contractors,
Right.
people of all walks of life who don't have traditional income. How do we help those people get a loan? So we've got two programs. One where all we require is a good credit score, like a 700 plus credit score. And if the employer will fill out the employment verification form and verify what they're making, so that, just to be open there, that kind of opens up the room for a little creativity, as well as another program for CPAs. Years gone by that we used to call that a stated income program.
Right.
It's not exactly that, but it kind of is, because now we have to have a CPA involved.
Mm-hmm.
But, for people who are having difficulty documenting their income, or like you said, they now have a higher debt ratio than the Fannie Mae program will allow, we have ways of helping those people get into a home or refinance the home as well.
Well, give us an example of a program like that. Is it a bank statement loan, or is it, like you say, it's more of a stated loan program? But what kind of a investment do you have to have? 10%?
Well, yeah. I mean, yes, the bank statement programs that's another great example. So somebody who's let's just pick a salesperson of some sort, or any kind of a commissioned worker. Maybe he's a contractor. Maybe he's a computer programmer, and he does contract work. He has a good living, but he writes off all his expenses. Well, how can we document that income? Well, the bank statement way is a good way, because we can see his bank statements. Now, he may not be the income that he pays taxes on, but we can see clearly in his bank statements that you can see the deposits. Then we can go to 12-month bank statement or 24-month bank statement. We can usually get a better interest rate for the client if the client can provide 24 months worth of bank statements, and we literally sit there with a spreadsheet and go through and we add up all the deposits and average them out for the course of the year. So it's a little more work on our part, but if we can help the client get into a home, that's one way to do it. Another example would be, as I mentioned, the CPA option, where as long as the CPA will work with us and write a letter, and I have all the documentation, the forms, and things how to do it. We can help the client get a loan that way, just based on the written letter from the CPA and a P&L statement.
Okay. In a situation like that, what kind of down payment do you have to have in the property?
Great. So if they are not a first-time buyer and they have a credit score of 720, we can actually get them in with only 10% down payment, which is amazing.
Oh, that's amazing. Yeah, it is.
But typically on that type of program, it's going to be 25 or 30% down payment.
Okay.
But we can help them get in with, being very creative on how we document their income.
Well, I think the difference between what we were talking about is a stated loan program back in the day, and what this particular program is, or number of programs, is that there is skin in the game, what they call, skin in the game. So people have enough so that they're not going to be, cheating's not the right word, but they're not going to be being too free about. It's not a signature loan whereby they're just a liar loan where they just say, this is what I make. No, I've got a lot of money into this deal, so therefore I want to document it the correct way so that obviously I get the best interest rate, and obviously that, I'm not walking away on this loan because I got too much into it.
That's right. And my personal philosophy is all it gets down to is, do these people make payments? So it's particularly frustrating on my side when I see, you look at people's credit, they've got a great credit report, 720 or 760 credit score, great credit. They've got a clear history of making all the mortgage payments for the last who knows how many years, but yet we can't document their income. So obviously those people are making the payment. They have the ability to make the payment.
Right.
So this kind of fills in that gap of the paperwork, if you will, allows us to provide the right paperwork that will be acceptable to the lender to approve their loan.
Why is it that the mortgage payment history doesn't carry more weight? I agree with you 100%. If somebody's paying a mortgage for 10 years, now they want to go buy something else, obviously they can pay the mortgage. They've been doing it.
Well, yeah, that drives me crazy, and I face that question a lot, and here's the answer. You've got a good job. You've done a good job making your mortgage payment for the last 10 years, and that's great. However, we're asking somebody new who has no experience with you to loan you another $300,000, another $400,000 to pay off the loan that you have. And the new people don't know you. So what we do, as you know, as part of our job, we create, and a lot of people think it's a mortgage loan, and it is, but on the bigger picture, on the Wall Street picture, what we're really doing is we're creating an investment-grade investment. And so the people who are loaning the money, they want to know how much money this person makes.
Right.
Regardless of the payment history. And you're right, pick the new payment history, but what we're really doing is we're satisfying the requirement of the new investor. People say, well, I have my mortgage with Bank of America. Yeah, but Bank of America is just servicing. They don't own it.
Right, that's true.
Usually.
Right, no.
They just, so we're asking somebody else, you, me, or the loan officer of Bank of America, whatever, to loan you $400,000. So, yeah, they want to know how much money you make.
Yeah, I get that.
To pay this back.
We're running out of time.
It is irony.
I want to get people to get your information because obviously the knowledge in the loan business is huge, and anybody out there who's listening will know that. But give them a way by which they can get in touch with you, if you would, Bill.
Yes, I appreciate that. So
sure.
My phone number is 818-406-4744. Again, 818-406-4744. My name is Bill, and my last name is Orr, O-R-R.
Bill, thanks very much once again for coming on, giving us your experience, and I hope 2020 will be a great year for both of us.
Oh, that's for sure. Okay, thanks so much, Jeff.
Thanks, Bill. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. I don't even know why I said it like that. But if you come to us, thank you for listening, by the way, and check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play. You know, we're on a number of different podcasts nationally. There's, what is it called? The Big Five? The Big Eight?
The Big Eight.
The Big Eight, and we're on all of them. So if you are...
OU812.
Oh, really? Very nice. Okay. Also, YouTube, you can see this show as well as 4 years plus supply of shows, the Las Vegas Real Estate Show, and a number of other things. And we've got some exciting things happening this year. So if you go to YouTube, go to Jeff Barton, The Mortgage Voice. That's my channel. And you can see exactly what you want. Join, become a subscriber. Click on the bell so that when a new show comes out, new information comes out, you can get an automatic update as to what we're talking about. We're going to try to inform and keep you abreast of what's happening globally as well as right here in San Bernardino and Riverside counties. With us, another great loan officer, person who has been on the show several times, but who does a number of great things out there in Riverside, San Bernardino counties, is Gary Herrera from Malibu Funding, who's, as I said, you reach a different demographic than most of my loan officers, Gary, and I do appreciate that.
Yes. And just to let you know as well, and I probably should have let you know, before was I recently moved down to downtown Los Angeles. So I still help a lot of people out in the Inland Empire, but now I am also establishing myself out here in downtown Los Angeles.
Well, interesting that you do that. Obviously, there are metropolitan areas in San Bernardino, Riverside counties, and really it's a stone's throw, if you want to look at it like that, to downtown Los Angeles, maybe a half-hour drive. What do you like about the change? What do you like about the market there, and what do you see maybe as the advantage that you have in that you live in L.A. now?
Oh, my gosh. There's so much... The opportunity here is just there. It's everywhere, and it's, a lot of people don't know, downtown LA right now is just huge in development.
Right.
Tons of money coming in. You got new high rises coming in all parts of the district, and if there's just everything. You got restaurants, the nightlife, you got sports. If you're just out here, an active person, and just want to get in the grind, it's a great place. You meet a lot of people, you network, you meet a lot of realtors, and you partner up with them, and they're just all fantastic. It's beautiful, and I love it. I've been here 3 months, and I love it.
When I said you reach a different demographic, because you're a younger guy, right? Your experience, you know what you're doing in a lot of different aspects of what we do in real estate and mortgages, but you do reach a different group of people than I would at 65 years old. Tell us a little bit about the communication, the strategy, the ways by which a guy like yourself would talk to clients. Is it more by texting? Is it some kind of social media platform? How do you do it?
Absolutely. You pretty much hit it on the head. Nowadays, this whole millennial group now, and I'm the early stages of them, probably day one of the millennial group and all that. But now It's all social media, reference as far as a referral from a partner or someone else who you've done business with through text. Most of the people that now I help out, I've never met face to face. It's by email, by text, direct message through social media, whether it's Facebook, Instagram. So we have all these different outlets and resources, and that's how people want to verify you as well.
Mm-hmm.
They don't ask for a resume. They look at your social media profile, and that's kind of how they gauge you. And they look at you, and they're like, "Oh, hey, yeah, he knows what he's doing." And then talk to you, and then once they talk to you, they actually, they can say, "Wow, he knows what he's doing."
And tell me, just because I'm going to pick your brain a little bit on this particular group, well, interest in rates, programs, availability, or is it more about getting comfortable with you as the loan officer or real estate agent?
First off, it's the true one is going to be getting comfortable with you and trusting you, and that's sometimes, not so easy when you're done over the phone.
Right.
And especially when they never met you, they know who you are. Most of the time, when they call, they're rate conscious. They're out there. They understand technology, first of all, so they can go online and try to shop you. And I see this right here, and this with this lender, and with this, and my bank's offering you this. And then you get a call, and they call me, and then I tell them what is available. And sometimes it's not what they want to hear, but I inform them. Oftentimes, this is kind of like a hook. It ain't no different than any type of advertisement.
Right.
Something that to get you, and just to get you on the hook, get you on the line. And next thing you know, you're invested in time, and the rate's not what originally set. And for me, 100% transparency. I tell people the truth, what these advertisements are, and they do understand what it's all about because, we're all kind of suckers in a sense for these
yes, I agree.
advertising that we see on TV.
No, I agree with that. I think, I don't care how old you are, how young you are. Yeah, everybody is a sucker for a good sales pitch. It's just you are. I don't know why that is, but it's true. Suggesting that perhaps finding someone you trust is more important than necessarily listening to the best sales pitch is what to do. And how do you bridge that problem?
Oftentimes, I just give them relevant information and up-to-date information, and I'll give them, hey, check this place out, check this place out. And oftentimes, I'm like, when you call in, they don't know you from anyone.
Right.
They haven't run your credit score. They don't know your whole scenario. The difference with me is, like, I'll get all that over a conversation and then tell you right there and then, hey, this is what you can get. Here's what's live. I'm not going to pitch you, hey, I can get you, 3.25, and, it's not even available. And just because I don't know who you are, I'll run your credit over the phone. I'll ask for the income document. We'll do all this together over the phone, and next thing you know, I got you a qualified rate right away, right off the bat. And for them, they hear that, and they're like, wow, that was easy. That was fast. I'm like, right. I'm like, all this other stuff, they're just trying to get your information, and they're just going to solicit you, market you, and they're going to try to write something that is probably not even going to be the best for you at the end of the day.
When you compete with the online Rocket Mortgages of the world or the technology, as you said, a lot of your borrowers, a lot of people you talk to are very savvy, are very good with technology. When they come to you, or how do you compete with someone who kind of wants to do the whole thing themselves, or do you even get calls from those kind of people?
I do get calls, and oftentimes they are calls from agents that I built a solid relationship with. And whether it be from a difficult file that we close together or whatnot, they understand that I can close. They understand what I'm doing. And oftentimes when they get quoted from, let's say, Rocket Mortgage or Bank of America or whatnot, any of these other banks, they go into escrow and they hit snags, they hit roadblocks. The next thing you know, they're not qualified. And they're going to fall out. Escrow's going to, break down. I get a call, kind of like a last ditch effort.
Right.
And I look at the scenario, I look at everything. I'm like, wow, yeah, this is doable. And they're like, well, how come? I said, I don't know, and I can't speak for them with inexperience, or they just missed this, But I can do this, and that's kind of how it goes.
No, I'm sorry, I didn't mean to interrupt you, but I was just going to say, I think experience really counts in our business. It really does. I mean, you can be as technologically savvy as you want to be, but when there comes a snag or a problem, you need a person who is experienced to be able to solve that.
And there's no computer, no technology better than a live person who can analyze that situation right away. That's it. So when people say, well, they can do this, it's all technology driven, I'm like, yeah, but a computer cannot stop, look, and diagnose what the problem is and fix it.
Gary, we're up against the clock. Can you tell people how to get in touch with you, especially someone who has experience in a lot of different markets? You're the guy. Tell people how to get a hold of you.
Well, absolutely. You can reach me at 310-882-9329, or you can also visit my Instagram page, which is GKH_loans. You can also reach me via Facebook. You can look me up, Gary K. Herrera. And you can also just text me. Text me is probably the easiest way to get back to you right away. Email as well, gkh.lending@gmail.com is another one. Or you can visit MalibuFunding.net, and you can view my profile there and get a hold of me.
Gary, thanks. Thanks, bro. Thanks for coming on. I really appreciate it. You bring us perspective that we don't often get on the show, and I really want to thank you for coming on.
Thank you, Jeff.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. Thank you for listening. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. Subscribe for free and never miss an episode. We are now on a lot of national platforms for our particular podcast, as well as this show. You can go to YouTube and see this show as well. Go to YouTube, Jeff Barton at The Mortgage Voice. Subscribe to the channel. Click on the bell to get notified whenever a new episode is available. And we are upping our programming in terms of quantity and value in the content that we're providing. So we're going to have a lot of new and exciting stuff in this new year. So please, when you're thinking about signing up for what we have, remember, we're on KCAA, KMET, and KCAA, the number of radio stations in San Bernardino, Riverside, and up in the Tahoe region of California. We're going to add some stations this year. Should be a very exciting year. Thanks very much for listening in. I talked earlier in a segment about expectations and then got drawn into the dreaded, yes, everyone's getting taxes and your costs are going up. But the expectations, what are expectations? What does that really mean? When you meet your loan officer or when you're trying to talk to somebody about buying a house, what are you looking for and how do you experience that interaction with those people? I want to ask, and I have asked in the past, several of the loan officers and people in the mortgage industry who come on the show, just what are their expectations when they're talking to clients, when they're talking to other associates? I know that as both a consumer and a business owner, I experience different ways and different levels of expectations of people. If they work for me versus if I want something from them. I don't know if anybody out there has kids. I have kids, and my expectations of what I look for when communicating with those people is a little bit different, obviously, but it is also as emotional. For instance, my children, do they call? Do they say thank you? Do they treat me with respect? These are the kind of things that I look for when I'm talking to business associates, new hires, in this process of trying to reinvent both what we do at Malibu Funding, and Malibu Funding, of course, is the company that sponsors this show each and every week and who I work for, and I want to thank them for doing that. But when I am looking at the communication between Malibu Funding and people it works for, that's what I expect. I expect them to call me back. I expect people to treat me with respect, and I expect prompt and honest delivery of services that we pay for. I've had some issues recently with a lot of, I guess maybe because the lending industry, like many industries in Southern California and maybe nationally, have changed and continue to change as a result of whatever the marketplace might have. Last year we talked a lot about what was going on in China, i.e. the tariffs, the trade war that was going on with Beijing. And why I talked about that? Because it affected the mortgage rates. It affected the sentiment and the expectation of how people looked at what they were looking to buy and sell. And as you know, there's a survey that comes out, I think it's once a quarter, the University of Michigan, they put out a consumer sentiment survey, right? And we look to that number, whether it's 75 or 105, whatever the heck the number is, and we always feel better if, in fact, that number goes up. Now, why does that make me feel better? It doesn't really affect me at all, but it does. Like the stock market, if you're following the stock market, you will notice that the stock market numbers are insane. We're at 30,000, let's say, in short order if we're not there when by the time this particular show airs. What does that mean? Does it make you feel good? Do you have stock in the stock market? Has your particular investment grown? Very few Americans have stock in the stock market. Why? Because that's a rich person's game. But do you feel good? What are your expectations about your own income and your own way to make a living if the stock market goes up or if the Michigan Sentiment Survey is high? All these ways that I guess the media looks to inform, but also make you feel. For instance, we have a person in the Oval Office who loves to put out their particular message all the time. Does it make you feel fired up? Does it make you feel laissez-faire? All of these things that affect us and our expectations of the level of service and the amount of money that we're going to spend on a loan, yeah, they matter. And if you feel as if your job is going to get better, if you're going to make more money, you're more apt to go out there and get a loan. And you really don't care about a small increase in the fees. Why? Because you want what you want, you know you can afford it, and your job is secure. That's all about sentiment and living the expectation of what that means. Because quite honestly, we don't know what the future holds. We on this show specifically last year talked about how we thought we would be in a recession by now. I did. I was absolutely wrong. Now, there are headwinds. What do we call by headwinds? Problems coming up. For instance, the deficit. Why is it $23 trillion and rising every year? And is that a good thing? No, it's not. So I'm worried about that. I'm also worried about certain aspects of the economy. For instance, last month, less jobs were created than the month before. And I've got 3 children who are working age in their early 20s. What kind of jobs are they going to get? They can't get anything in the field that they want to be in. Why? Because not only is competition really strenuous, but the openings and the expectation of this group of people to get into the marketplace is quite a bit different than it was when I got in the marketplace back in the 60s. Because at that time, the economy was booming. We didn't have the type of, I guess, financial services industries really dominating that we do today. So on the one hand, the expectation that I have approaching 65 is quite a bit different than the expectations of my children when they're trying to just get their first real job at a real company and try to get their career going. Maybe you have children. Maybe you're understanding what I'm talking about when I talk about the level of expectation will dictate how you're going to perceive whether you can buy a house, whether you want to pay the mortgage, whether you can continue to, I guess, chase the American dream. And again, speaking of expectation, that too is something that is not necessarily clear as to what it is, because it's different for each person. Some people's expectations of what that American dream is, hey, I want to have a house, I want to have my kids grow up and have opportunities that I couldn't have. That was what was drilled into us as baby boomers back in the day. Today, I'm not sure that is what is the American dream. Do you have an idea on that, Daryl?
The American dream just is have a comfortable place to live and be, fed most of the time and somewhat entertained. But some people put all of their well-being into the job. I am what I work for. People that don't have a job feel really bad.
No, I agree, we have two.
I'm a plumber. I'm an electrician. I'm a car mechanic.
Right.
But I'm not doing it right now. Right?
Well, I think culturally there's also different aspects as to what that actually means. I know that in certain cultures, getting a job, getting up in the morning, getting out the door is a way to feel as good as you can feel. Other people need to be able to say, no, I want residual income. I want to sit down. I want to have a yacht. I want to, whatever it is that makes you feel like you're doing something. That self-esteem, that fulfillment of that particular promise of the American dream is really what's driving a lot of people, and it changes depending on the culture, the age, the type of occupation you're in, all of that.
Yeah, it's whatever completes you.
Right, that's right. And what I'm saying is the sentiment, the expectation of each individual, because of the nature of the economy in Southern California right now, is going to be changing. There are a lot of different aspects of it, whether it's new taxes, whether it's whatever you say about the national political front, but maybe that changes what you are too. And depending on where you are in San Bernardino, Riverside counties, Los Angeles, Orange County, San Diego County, Ventura County, Indio, all of these different areas have within them different planes of how you attack and how you expect to live out each day. Why is this important? Because when we're talking about mortgage interest rates, when we're talking about the availability of funds, when we're talking about how are you going to buy the house that you want to buy, it's all based on this feeling that, yes, I can afford this. Yes, let's go get this. Yes, I want to have kids or I want to retire. Without that, you basically are living a day-to-day existence whereby you're paying the rent, you're paying the bills, but you don't have the level of expectation that you have earned the right. And we talk a lot about this in the USA, is what are your rights and what are your privileges? And this being homeownership, most people would say, that's my right. Anyway, I'm Jeff Barton, voice in the mortgage industry. Thanks for tuning in, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.